Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Happy Friday, everybody. I hope you guys are having an absolutely fantastic weekend. Start to your weekend. It is a sunny day here in Seattle, Washington, and they are doing an air show right above my house. So if you guys hear some booms, it's not me, it's the air show. F-16 is flying above our house. It's cool to watch. It's not cool to listen to. That's just an explanation there. I hope you guys are having a good day. We got Marcus Maloney with us today from Epic Realty and Investments. Marcus got his start in wholesaling. He's a master at wholesaling, but now he focuses on residential group homes. I'm super excited to jump into this, Marcus. Thank you very much for hopping on the show.
Thank you, Gabe. Thank you for having me on the show, man. And it's Equity, Realty, and Investments. So, but Epic was close enough.
I said that wrong, didn't I? That's my bad. My bad.
It's cool. It's cool. So, Yeah, just my quick background. I think that's where we're going, right, Gabe?
Yeah, it's exactly where I'm going to take us.
Okay. Yeah, man, got started. I learned actually from my mom back in the 80s, late 80s. She got started. She was a nurse for a government facility, and she was a nurse, and she just didn't want to do it anymore. She bought two houses, right? She bought one that was just a burnt out house, and then the other one was just a trashed out rental with the squatter. And me and my brother,
those are the hard ones. Yeah.
It was like, what are we gonna do with these houses now? Mind you, I think I'm like in the 8th grade. My brother was graduating high school, so for us it was just, hey, this is more work for us to do, because my mom always came up with these creative ideas to find work for us. But at the end of the day, you know, we still hold one as a rental. So think of how much money that property has paid us over the years. So you go back from 89 to 2024, what's that, 34 years or so?
Long time.
34 years. Yeah, that property has paid itself off time and time again. We still got positive cash flow coming from that property. And then the other one, she did a fix and flip. And this was, again, back in 88, 89, before fixing and flipping was even a thing. She bought it, was like, hey, I can go in and renovate this thing and try and resell it. And that's exactly what she did. And she made like 30, 40 grand, if I'm not mistaken, on that flip. So after that, you know, it kind of opened my eyes up to, you know, the power of real estate and the power of land. So that's kind of how I got myself started. Naturally, 8th grade, I wasn't going out buying properties or anything like that, but it took me some time. But it always resonated with me, you know, the power of real estate.
Yeah,
so
you had it in the back of your mind. Your mom set the precedent.
Yep. So she set the precedent. And then after that, you know, I really didn't have any money to get started in real estate. So naturally I was wholesaling. So putting out direct mail pieces, driving for dollars, walking for dollars, all of that kind of stuff. And then just started finding deals, man. And that's how I got started. I cut my teeth, you know, on the main streets of Chicago and Phoenix. So that's how I got into real estate.
Nice, man. I love it. And, you know, I love hearing when people have positive real estate mentors or role models in their life at the early years, because, you know, that's really when you kind of your influence and you get to see the impact of what real estate can do for somebody financially. Sounds like your mom, you know, she did those first 2 deals and you really got to see the power of what real estate can do. And so you took it by the horns, you ran with it. Wholesaling is a hard game. It's hard to get into. It's hard to keep, you know, generating consistent income as its own business. So, how long did you
Gabe? Say that again, because a lot of people have a misconception that, hey, wholesaling is easy. I can get in, get started. Yeah, it is a low barrier to entry, you know, in certain markets, but it is a grind. It's a dog grind every single day, every single moment.
Yeah. I never recommend anybody You can definitely do it, but I don't recommend anybody start a wholesaling business when I talk about real estate, because it's a grind, and it takes a lot of effort, a lot of systemization, and it's just a lot easier to even flip a property and make a
Yep.
significant amount of money than it is to do all those wholesales. But it is a great tool to have in your belt. We were talking about this before we got on the show. I'm doing a deal right now where it just doesn't make sense. Like, I would never buy this property. It's way too high priced, but I know somebody in that market who wants that property. And so I'm saying, whatever, we're just going to get this deal done, wholesale it to my colleague. So it's a great tool to have in your belt. And it sounds like something that you really mastered. So once you first got into wholesaling, how did you grow it from? It sounds like you built a wholesaling company before you started getting into buy and holds.
Yeah, man. I built a wholesale company, had a team of virtual assistants, had a team of acquisition managers and lead specialists and everything like that. And everything was pretty much on autopilot, right? But what I was looking at was, at the end of the year, I was starting to look at my profits, right? And at the profit against the time spent and making those profits. And when I look back, it's like I was making probably like 16 to 20 bucks an hour, doing the work. By the time, I paid out, all my employees and everything like that. And I was like, you know what, this just doesn't make sense. And it's a grind. Now, mind you, like you said, Gabe, it's a good idea when you're really starting and you don't have nothing, you don't have anywhere to go. Yes, you can do it, but eventually you need to graduate, and you need to, once you kind of master that or understand, the entry level basics of real estate and wholesaling, then it's now, okay, these same deals that I'm pitching out to everybody else, I need to hold. And if you listen to most wholesalers, right, that have been doing it for a long time, they always say, man, I regret not holding all of those properties that I wholesaled. So think about it. And 2009, 2010, and 2011, all of those properties that we were wholesaling here in Phoenix, for, we were making $5,000, $10,000 on them. Those properties now that we were wholesaling for 50, 60, 70, even the ones that we was wholesaling for $150,000, now worth $400, $500, $600,000. And this is just 10 years ago. So imagine all of the deals that we had, and we would have held those deals, man, it would have been a no-brainer. So just guys, keep that in mind also.
Yep. So at what point did you get into residential homes, residential group homes? That's that's a very specific strategy. So what kind of brought you to that?
Well, you know what? It goes back to my mom and my grandparents. Actually, we grew up on a 49-acre farm just outside of Chicago. And my grandparents and parents were always entrepreneurial. My mom, she had a job, but she was always doing something else. And they were bringing inner city kids from Chicago to this farm and just showing them a different way. It was like during the summer, get them out of the inner city, bring them to this farm. We had basketball courts and all of this kind of stuff. And then we started noticing the state was saying, hey, you know what, if you're doing this with these kids, hey, we got kids that's in the system that can use, your facility. So they started bringing kids out, and we got a contract with the state of Illinois. And then we just started expanding, and then we needed other residential houses to house a lot of these kids. So then we would buy them, renovate them, and then we would put kids in them. So versus getting them and renovating them just as a traditional rental, now we were renting them out to the state by the bed per kid. So it exponentially, increased our returns on each property. So my grandmother and mother started that, but then me and my brother kind of took it over, and we just been working to expand that footprint of what they started.
Very cool. So I guess I'm not specific. I'm not clear on what the strategy is. I thought residential group homes, when I hear that, especially when I hear group homes, that is like a retirement, assisted living for the elderly. You were talking about kids. And so dive a little bit deeper. What is it that your strategy does?
So these are kids that are wards of the state. So they could be failed adoptions. They could be kids that, parents are substance abuse addicts, and they are now, I don't want to say properties of the state, but they are, the state is their parents,
right?
And the state don't have any place to put these kids. So they contract with us, and then we open up our homes for these kids. So the very big misperception is residential group homes are only for, elderly or mentally disabled, but you have a lot of kids that's in the state systems that they don't have any place to go. Normally the option is foster home. There's not enough foster parents out there. Juvenile detention centers. Well, some of these kids don't warrant being in a juvenile detention center. It's not their fault that they're in a position that they're in. Their parents were screwed up, messed up, or whatever. Or the other option is like the mental state hospitals. And a lot of these kids don't need that. So what's the other option? And we found another option and another way for these kids to grow up in some sort of semblance of a family setting without being institutionalized.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah, I mean, having stability in your younger years is so important. So it sounds like that's really what you guys are giving them is stability in housing, being able to stay in one spot and not having to move around all the time. Are there specific requirements for, if an investor, say here in Seattle, had a single family home, they wanted to put their home up for use for a group home for the youth? Are there specific requirements the state, has for these type of properties? What is it that kind of qualifies you to rent in this way?
So there's two caveats, right? So we not only have the properties, but we also have a complete nonprofit agency that has a contract with the state. So for someone really to get into this, they would need to find a state agency that already has a contract with a company. Let's just say Catholic Charities. Catholic Charities is across the country. Catholic Charities have kids that need placement. You would contact Catholic Charities and say, hey, you know what? I have a house that we would explore, doing this with kids. And normally the agency will make sure that there is 24-hour care, at the facility or at the home. They will make sure it's a triple net lease. So they would pay, the rent, all repairs, and in some cases they will pay the property taxes also. So it's really finding those subsidiary organizations, nonprofit organizations or for-profit organizations that work with kids.
So it's rented
directly with them.
Right. So it's structured as a triple net. So they're paying essentially everything. Wow. That's really unique.
And it's so, and your lease is with the agency and not with the kids or the foster parents or anything like that. So it's guaranteed rent.
Interesting. Do you have any resources that you could provide to the listeners if somebody wanted to get involved in this, like any websites or agencies that you specifically know are high quality?
Sure. Like I said, Catholic Charities is one, but really only thing you have to do is contact your local government. Like in Illinois, it's called the Department of Children and Family Services. Here in Arizona, it's Department of Child Safety. So you just have to find out what government agency is the ones that take care of kids, and contact them and just see what services they provide and let them know exactly what you're trying to do. And they'll connect you with the third-party organizations or agencies that have the contract with the state.
Very cool. What about locations? It sounds like this is probably it's unique to cities, right? And so this is not going to work in a small town or anything like that. You have to be
actually, Gabe, it's the reverse, because remember what we did, we were outside of Chicago. So they wanted to take the inner city kids out of the inner city to this rural setting.
Interesting. So, right. To get them in a different environment where hopefully you change their behavior or something like that.
Exactly. Okay. So you put them in a rehabilitative mindset. So it's like, okay, we're going to show you a different way. The inner city is there. Yes, you understand the inner city, but hey, how about this? Look at this option. And then that way you can start working with them. And these kids begin to explore themselves and begin to understand exactly who they are without those negative influences that's around. Now, that's one side of it. Now, the other side of it is you can have a residential group home in the inner city. It's a lot more taxing because it's a lot more work, because these kids, a lot of them have in and out privileges once they get to a certain age, and it's more difficult to, kind of corral them and make sure that they're doing what they're doing, because what you want positive outcomes. So for an investor, it's, yes, we get the rent, but the overall scheme of it is you want positive outcomes for these kids. So it's not only just the investment in the property, but the social investment in the community also.
Yeah. Are there any additional amenities that you like to have in your house for the kids? Is there, I can't really think of anything off the top of my head, but it's just a regular
bedrooms. Okay. Yep. The bigger the bedrooms, the better, because then you can do, bunk beds, or you can, put 3 beds in one room and maximize the profit. So it's no different than like a profit share home or a pad split or something like that, where you want to maximize the square footage and the footprint of that home and try and get as many beds in there as feasible, with still some traditional sense of, home living.
Yeah, absolutely. Well, this has been very interesting. This is the first time I've ever heard of this unique structure in real estate investing, providing this service for the youth. It sounds like a great purpose and a great thing to be doing. So what's next for you guys? What's the goal on the horizon?
Man, right now we're wrapping up an emergency shelter. So we just purchased like a 4,000 square foot house on 11 acres. So we're transitioning that into an emergency shelter, because again, sometimes you have these kids that's transitioning before they go to their final placement. They need a place to stay temporarily. So we're providing emergency shelter housing for those kids. So it's really just continuing on the mission that we're doing, Gabe, and really looking to help more kids, more families, and make a profit in the end. So doing social good while still investing.
Yep. Yeah. 11 acres. That sounds like a good piece of land to be growing up on. So it sounds like you got a good one there.
Yep. Absolutely.
All right, man. Well, hey, I just took a peek at the clock. It looks like we have run it down. So it's time to jump into the quick question round. Are you ready?
Sure. Let's do it.
Let's do it. Starts with books or any form of education. I need 2 recommendations, one for general life wisdom, one for real estate or business specific.
Okay. So one book I recommend is The Alchemist.
So good.
Paulo Coelho. Yeah. Excellent book. It's just how to fight through adversity, and stay focused on your journey. So that's one. That's one that I enjoy reading. And then real estate, not really real estate specific, but I work with a lot of, direct to sellers. So it's a lot of negotiations. So Never Split the Difference by Chris Voss is good. That's a good one for people to read, especially if you're really on an acquisition side of real estate.
Yep. Yeah, I've been recommended to read that before. I haven't picked it up yet, but I do have to do it. I absolutely love The Alchemist. We actually just had our first, she's like a month and a half old, but I'm super excited for her to get to the age where I can start reading books to her. And The Alchemist is one that I think I'm going to be reading over and over because I love that book. It's one of my favorites. So
It's excellent. It's in story form, but it's so many principles in the book to where you look at life and you'd be like, wow, okay, you know what? There is more that I can do.
Yep, for sure. All right, next question is for your younger self. So let's go back to the Marcus who was looking at his mom doing all those things in real estate and saying, I can do that. So go back to him, look him in the eye, give him one piece of advice moving forward.
Buy more properties and be more aggressive.
That's what everybody says. That's the advice that every single person comes on this podcast. They say, I wish I got started sooner and I wish I kept more in my portfolios. So you guys are out there and you haven't gotten started. Take the advice from 370 people so far. Go out there, buy your first deal and hold it. That's all you got to do.
Yeah, that's one of the things that my mom lives on. She was like, once you buy a property, just never sell it.
Yep.
And I was like, but it appreciates, look at the appreciation. I can sell this and go and buy 2 more. She said, that's the only reason why you sell a property is if you're taking the profits from that to go and invest in more real estate.
Yep. To roll it up. That is the only reason to do it. All right. Next question is about the US. It's a big place, a lot of opportunity. Give me the single metro, the single city you're most excited about investing in today.
Man, the most excited about investing in, I'll have to say, the tertiary markets of Chicago. I know a lot of people say, Illinois is very, very tenant friendly, which it is. But if you have the right, strategic partners as far as attorneys, police officers, everything like that in place, you won't have any problems. And I love when people talk about, how terrible Illinois is when it comes to real estate investing. And I'm like, yep, great.
You guys go that way. I'm going to stay here.
Yep. I'm going to go in a totally different direction. Absolutely.
Yeah. That's funny. Even for self-storage, I've, deals that I've found, didn't want to buy them myself. I tried to wholesale them. Everybody was like, no, I don't want anything to do with Illinois. It's just not a city I want to own in. But that means for the people who are buying in Illinois, there's more to go around. So it's good for you guys.
It all relies on your strategic partners, having your attorneys in place, it's a great state to invest in, but you have to be very astute about your business. You have to cross every T and dot every I. Your lease has to be tight, and you just follow the law, man, and you won't have any problems. You'll be able to get tenants out, evicted.
All right. Next question is about marketing. It all starts with finding the deal. So what's your favorite way to generate new leads?
Favorite way to generate new leads, man, is really cold calling. I would say cold calling and direct mail, but more importantly, relationship building. Once you go into a market, find out who those major players are in those markets and start working with them. Even if you have to pass, like you said, pass on a multi-million-dollar deal where you only make 10 grand, but that person on the other end is happy and that you will be able to come back to them and say, hey, you know what? I got another opportunity for you. Instead of me just passing it off, let's partner on this opportunity. So you can get into more deals, by having those strategic alliances and building rapport with other major players in your market, and don't look at them as competitors.
Yep. Yeah. I love that advice. It's all about relationships. And I can't remember what the phrase was, but somebody told me something a while ago. And they said, oh, shoot, I totally ruining it. The idea is that you want to create long-term relationships, and not focus on the short-term gains, but the long-term gains in doing multiple deals with the individual. And so you don't look at the win of, I want the most out of this deal for myself, but you just look at, hey, how can we make this win for everybody? And then over time, that's going to be the best way to go about it. So love that advice.
One of the things that I tell people is not every relationship has to be transactional, especially, and I'm going to be a little bit biased, women that are listening, it's men. We always want to see, okay, what's the transaction in this experience? Yeah. And sometimes you got to set aside that transaction and say, all right, what can we benefit or gain from as a collective group together? And then, you'll see the transactions happen in the future.
Yep. Great advice. All right, next question is about lessons learned. Not every deal smells like roses. Sometimes shit hits the fan, and something happens that is unexpected. What was the biggest lesson that you've learned through an individual deal so far?
Sellers and buyers both lie, right?
Interesting. All right.
They're gonna lie. They're gonna tell you what they think you want to hear, but you have to vet them thoroughly. That's for your sellers and for your buyers. We had sellers that said, hey, you know what? Yeah, I got a lien on the property. The lien is 30 grand. You come to find out the lien is 130 grand, right? You have buyers that say, yes, I'm cash ready to go. And then you get into the deal and then they say, hey, you know what? My bank financing is going to be calling you. So it's just understand that trust, but verify and verify completely.
Yeah, for sure. And that applies for due diligence too, like for the property. Never trust what the seller says. Most people have good intentions, I feel like, but they err on the side of, what's beneficial for them. And so you gotta take what the seller says, take it with a grain of salt, and then do your own due diligence. Figure it out for yourself, just to make sure that nothing's gonna go wrong. Good advice. And that leads us to the second to last question. This is about your strengths. We are all gifted with strengths that we uniquely provide this world. So what is your Superman strength?
Problem solving. Man, I can diagnose and identify a problem and come up with a solution to where it's beneficial for both parties. I think that's definitely my superpower. I love going in and identifying problems and trying to figure out how I can fix them or how we can fix them together. So that's my puzzle.
Yeah, no, that is a strength that you need in real estate because there are plenty of problems to go around. So shit's gonna hit the fan in every single deal. It's never goes the way you think. And so you just got to run into the problem, fix it, and move on.
Yep. You got it.
All right. Last question is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you, learn a little bit more about what you guys do. So what is the best way for people to reach out?
Man, all of my social handles are MRCS Maloney. That's Marcus without the vowels. So MRCS MALONEY. Instagram, YouTube, Twitter, Threads, everywhere. That's how people can find me, or they can go to my website, marcusemaloney.com. I'm an open book. So if you want to chat, feel free to give me a call. I even have a 15-minute free consultation. No sales, just love to talk to people.
All right. I love it. I will put those links in the show notes. And that's funny that you mentioned Threads. That's the Twitter of Facebook, right?
Yep. That's the Twitter or Facebook.
I haven't opened it up yet, but I've heard interesting things. So I'm gonna have to check it out.
Yeah, check it out, man.
So as I said, I'm gonna put those links in the show notes. If you want to reach out to Marcus, just click a little more in the description. It'll pull down the full description, and in there you can find those links. Marcus, that wraps it up. Thank you very much for hopping on the show.
Thank you, Gabe. I really appreciate you giving me the opportunity to talk to the Real Estate Investment Club.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.